What's up, guys? My name is Jack, and welcome to Invest Today. Today, we are going to jump into the second episode of the most popular series on general investing YouTube channels and my YouTube channel as well, and that is Three Stocks I'm Buying November 2018 edition. So, I already made a video for October. So, what we're going to do first is we're going to go over the three stocks that I recommended in October. We're going to see how they've done, since I recommended them. Whether I change any recommendations that I've had on those three stocks, whether I keep my buy recommendation on those stocks, and then we're going to go into three new stocks. Some maybe which have been from last month, some maybe some new stocks that we're going into. You just got to wait and see, guys. So without further ado, let's jump into it and review the three stocks that I recommended last month. All right, guys. So jumping into the first stock that I recommended last month is Facebook. It is a stock that I will recommend this month as well, so it makes the cut, it stays on. And as we can see, all it's done ever since it had that big drop, back at the last earnings, is it's continued to sell off, and it's going to more than likely continue to sell off into this coming earnings. Now, it does have earnings coming up, and it has gotten so negative. And whenever it gets so negative like that and you cannot find a bullish thesis by an analyst, typically they're going to surprise to the upside. I mean, take a look at the numbers, and the expectations are so low. It's sold off so much. I've continued to buy it at 155, and it's found a lot of support there. It's a stock that I absolutely adore at 155. It is a value stock. And as we can see where the pointer is on the picture, that is where I recommended it last month. It is slightly down, but I believe it will reverse that trend. It's found support multiple times at 155 and 150, and it's kind of bounced around in there. And I believe the earnings they will beat, and the stock will, that'll be the catalyst to send the stock higher, guys. Alrighty, guys. So the second stock that I recommended last month was Lam Research. As we know, if you look at the industry as a whole, the semiconductor industry has gotten demolished, and Lam Research is no different. It's sold off in a massive way, had a little pop during earnings, and it's kind of floated, back down a little bit, giving up pretty much most of the earnings gains in about 2 days. I still believe. Now, you have to understand something. I have a buy rating on Lam Research, but you need to take a long-term perspective. The chip sector as a whole has a serious supply-demand issue where there is way too much supply right now and not enough demand. And that's going to take, quite a while to reverse. And this one could see more potential downside, but, out of all the stocks in the industry, in the sector, the semiconductor sector, this one has sold off so much that I really believe that the downside is going to be limited. Now, I will foresee this being on the three stocks I'm buying list for quite a while, as I believe it'll probably trade sideways, possibly down a little bit, possibly up a little bit. Now, I honestly believe they do have a good dividend, so I would recommend getting in this stock around the 140 level is kind of where I got it for. And as we can see that the momentum indicator is starting to turn to the positive side, as well as the market forecast indicator indicating overbought, oversold levels. It's currently, in the upward trajectory. So that is something I seriously, would take in consideration when looking to pick it up. And I definitely recommend you guys getting those indicators to better help you with your trades. So I reiterate, Lam Research is a buy. It has potential downside. It has potential upside. Take a long-term perspective, and you will profit in the stock. Guys, let's take a look at my poor FedEx. My FedEx position has gotten demolished, and I picked it up later for my clients, and it's definitely been trending down, as we can see. I think I picked it up for my clients kind of around the 225 level, so it has it's extremely volatile stock right now, especially with the broad market sell-off. So you can see where I recommended it last month, where it is now, and I reiterate the buy. It's only gotten lower. It's a fantastic stock. It's absurd how low it's gotten. People are worried about rising rates, and the transports don't do well if it's not a hot economy, and that's what people really worry about. Again, this one is still a buy. If you look at Credit Suisse or the street, all the analysts still have it as a buy. There's a lot of fear of the economy cooling down, and that's kind of why it's sold off in a big way, coupled with the general market sell-off. Any stock, no matter how good, we had a big market sell-off, every stock gets hit. That's kind of how a market sell-off and a correction work. It has a huge, you can see the red momentum indicator is very much in the red, and the market forecast is in the ridiculously oversold position. So if you were looking to get into FedEx, I would highly recommend doing so. And taking, again, a long-term perspective. I reiterate the same thing with Lam Research. Especially if you have a large time horizon, think a year, think 2 years, think 3 years. This is a stock I've already owned for almost a year. I enjoy it. It has a dividend, so you're not just holding it just to hold it. You are getting, some benefit there. And, I think at 217, 220, this stock is an absolute steal, guys. It is an extreme value stock. All right, guys. The first new stock that I will be buying in November 2018 is Goldman Sachs. So Goldman, it's another stock that has seen ridiculous downside, despite it being a rock solid company. All the regionals and, the national banks have totally taken a beating, despite posting amazing. I mean, go look at Goldman's quarter that they just had. You can see that they had a pretty decent pop. So the stock is kind of, slightly below where I recommended it in the October 2018 Three Stocks I'm Buying edition. I reiterate Goldman as a buy. Anything below like 229 is an absolute steal. Definitely take that stock for a long-term perspective. Again, they have a good dividend, so you have some insurance there. It's a fantastic stock. It's something that Jim Cramer owns on his Action Alert Plus .com club. It's the best of breed in terms of financial stocks. They're expanding with Marcus. Go see some of my other videos that I've done, talking about Marcus and Goldman Sachs as a whole. David Solomon just took over as the new CEO. He is fantastic. Go do your research on him. This stock is starting to move to the upside, and I foresee it trending, up in the near term, barring any market-wide sell-off, which we have gotten recently. So that, like I said before, any stock can be taken down in a market-wide correction. So buy Goldman right here and right now, guys. Raytheon is my newest position. I bought it yesterday at $190. And depending how Facebook and Raytheon trade, they are my biggest position. It flip-flops, because they're pretty much an equal position. This is a fantastic hedge, against the broad market sell-off. And you can see Raytheon on a day like today when the market is down in a big way. Raytheon is up or flat. They're coming into earnings. I think they're going to beat earnings, and the stock will move to the upside. If it doesn't, it's still a buy. I still recommend Raytheon. It's sold off in a pretty big way. It's below the 200-day moving average. The 20s crossing the 50. The momentum indicators in the very deep red territory. It's oversold. This is a fantastic stock. What makes this different and why I like it more than, let's say, a General Dynamics is because the midterm elections are coming up, and there's a pretty good chance that the Democrat Party will take at least the House. They probably won't take the Senate, but so General Dynamics, other companies that have a lot of spending in the United States, they typically go down, especially if it goes Democrat. So that being said, Raytheon, because of their Patriot missile system, they sell pretty much worldwide, and they have more global exposure compared to companies that have more U.S. exposure, like a General Dynamics or a Lockheed Martin, something along those lines. So Raytheon is more of a hedge on the international picture. I think this stock is a great buy where it is. So just to reiterate, guys, we have Raytheon, Facebook, and Goldman Sachs as the new three stocks I'm buying for November 2018 edition. And I continue to have buy ratings on last month's stocks, Lam Research, FedEx, and Facebook, guys. Thank you very much. Thank you very much, guys. Please click the subscribe button, throw me a like, throw me a comment. Let me know if you guys want me to continue this video. What are your three best stocks? Do you agree with any of my picks, disagree? What do you think of the stock performance last month? And where do you think these three stocks are going in the future? Thank you, guys, and I'll see you next time.